Oh, fuck. All right, dude. So Claude found me $1 billion opportunity. I'm gonna keep attacking. I'm gonna keep attacking. I'm gonna keep attacking. I'm gonna keep attacking. Okay. moondav.com/launch here. Meme coins are entertainment, not investments. Most go to zero, not financial advice. The safer launchpad. AI screen meme coins on Hyperliquid. I need to update their branding before they get mad at me again. It used to be on my head about that, dude. moondav.com/launch. Make sure that all Hyperliquid is written like this with a lowercase l, one word still. And look out through there. And then for the rest of this time, make sure not to show any addresses. I like how you did above where the contract addresses and everything are shown just a portion of it. Truncate everything. I got a bunch of people looking over my shoulder right now. And this is pretty not secretive, but like we got to make sure not to get hacked essentially. So when working on all this. So just keep that tight. All right, I'm gonna tighten up. I'm gonna tighten up just immediately because this stuff I can't let this one get hacked, dude. Can't let this one get hacked. You got the keys in the chat. What I want to do first and foremost here is this. When you do a full analysis from a legal standpoint, there has been some new law put into place, or at least decisions made by the SEC and CFTC. And I need you to do a full analysis here as a US user that's launching this, that it is 100% kosher. Now, this is my 18th time doing this with you, but I want to be extra sure based off of their March 17th announcement. It sounds like meme coins are collectibles, and building a piece of software that launches those meme coins, or even launching your own meme coin in the United States, is now chill. But push back wherever you can and make sure that we're 100% in the clear before I move forward with this. Okay, so I built something pretty sick, but it's only because meme coin regulation has changed. I see there's a huge opportunity here to build a safer launchpad and put it on Hyperliquid, because Hyperliquid is debatably the future. I'm not going to say that. I'm just going to build for it. I built the Hyperliquid data layer. It makes sense for me to do this. I have taught you guys step by step how to automate your trading on Hyperliquid. It's just like, it makes sense. Good morning, Tupac. Good morning, AM. Good morning, Massimo. Josh, I think you won, dude, by the way. So go check out that video. I'm going to post on Twitter right now. I'm posting it right. I already did. I already posted it on Twitter. Announcing the winner of the next competition. If you're late here, go watch this video on Twitter and you'll see the 2 winners and how to claim your stuffs. I make it in that video. So congrats, bro. I think that's you. You're welcome. Thank you for participating. Be the first to launch? Who's going to be the first to launch is the question. I got to debug this. I'm not going to launch until I get the legal clarity here. Okay, so good. I have the comprehensive plan. Let me put together the full analysis. Here's the full breakdown. I'm going to be going through be thorough as possible and push back where the risks exist. March 17th announcement is very good news, but it's not a blank check. The good news, what March 17th, 2026 says. On March 17th, the SEC and CFTC jointly issued a 68-page interpretive release that establishes a formal 5-category taxonomy for crypto assets: digital commodities, digital collectibles, digital tools, stable coins, and digital securities. This is the first output of Project Crypto, the SEC CFTC initiative. The critical part for your launchpad: meme coins are explicitly classified as digital collectibles, assets acquired for artistic, entertainment, social, and cultural purposes, and are therefore not securities under this framework. Assets falling into the digital commodities, digital collectibles, or digital tools categories are not themselves securities, meaning offers and sales of those do not trigger registration requirements under Securities Act of 1933. This builds on original February 27th staff statement that said meme coins are akin to collectibles, typically purchased for entertainment, social interaction, and cultural purposes, and their value is driven primarily by market demand and speculation. The March 17th release elevates that from a staff level opinion to a full joint agency interpretation with legal weight. The interpretation formally adopts the position that a crypto asset is not itself a security. Rather, the transaction is the proper unit of analysis. This means meme coins as a category are not securities. Your platform facilitating the creation equals not a securities offering. Your launch page is well designed. Your disclaimers already frame tokens as entertainment and digital collectibles. You disclaim any expectation of profit from the efforts of others, and you position yourself as a software platform, not an issuer. The language maps directly to the framework the SEC laid out. Where I'm pushing back: not a security does not equal not regulated. That's okay. I'm fine with being regulated. By virtue of being classified as non-securities by SEC, meme coins will generally be categorized as commodities, subject to the Commodities Exchange Act and the enforcement of jurisdiction of the CFTC. The CFTC has an anti-fraud and anti-manipulation authority over commodity spot markets. They can't regulate your platform day to day the way SEC would regulate a securities exchange, but the CFTC may prosecute fraud and manipulation in interstate transactions involving any commodity. What this means for you: if someone uses your launchpad to run a pump and dump scheme, the CFTC could investigate the manipulation. You're not the issuer, creators are, but if there's evidence the platform facilitated or had knowledge of fraudulent activity, you could get pulled in. Your AI screening is actually a double-edged sword here. It's a great marketing differentiator and reduces risk, but it also creates a duty of care argument. If your AI flags something as suspicious and you let it through anyways, that's worse than having no screening at all. Mitigation, you already have AI screening, risk scores, creator wallet tracking. What you should add: clear written records of screening decisions, an escalation process for borderline cases, and a policy for removing tokens post launch if fraud is discovered. That could be good. I definitely want to just make sure to check all boxes here. The fractionalization exception is real and could bite you. The SEC warns that fractionalization collectibles could still trigger securities treatment. The edge case is when an NFT project explicitly markets tokens as investments or fractionalizes them into fungible units, which can still trigger securities treatment for those specific sales. Your tokens are fungible ERC20s on a bonding curve, not unique NFTs. The digital collectibles classification for meme coins under the March 17th framework treats them as akin to collectibles, but acknowledges they're fungible. The SEC's specific carve out here was aimed more at NFT fractionalization. However, this is an area where a creative regulator could argue that a bonding curve with auto graduation to a DEX at a specific market cap threshold starts to look more like a structured financial product than a collectible. Your 77.7 graduation mechanism is automatic and trustless, which helps. There's no managerial effort post launch, but I'd flag this as gray area that hasn't been tested: the labeling trap. You can't just call something a meme coin. The statement makes it clear that it's not a get out of jail free card. There may be facts and circumstances where merely labeling an asset a meme coin will be insufficient to avoid the reach of securities law. The statement cautions that these views may not apply to meme coin transactions that are inconsistent with the descriptions in the statement, including fraudulent activity such as products that are labeled meme coins in an effort to evade the application of federal securities laws. If someone launches a token on your platform and is actually raising funds for a business or promises returns or pools capital for a managed enterprise, slapping a meme coin label on it doesn't help. Your AI screening should be catching this, but you need to be specific about what you're screening for just beyond scam patterns. You should also screen for language and token descriptions that sounds like investment solicitation. I like that. I like that a lot, dude. Okay, so I'm going to make some notes here based off of this advice because I think this advice is good. So, essentially, have the AI screen the description and the name to make sure it's not pitching it as an investment or a way to raise funds or that it promises returns. This will be in the screening process before they launch. That's good, dude. State level risk. This is where it gets uncomfortable. The federal picture is clear, but states operate independently. New York is looking to address crypto fraud at legislative level. Um, for virtual token fraud, illegal rug pulls, and private key fraud. Penalties include civil fines up to 5 million. The bill defines rug pulls as when a developer sells more than 10% of a token supply within 5 years of the last sale. This bill isn't law yet, but it has companion Senate legislation. If it passes, it would create criminal liability for token creators. You're in Puerto Rico, but if New York residents can access the launchpad, you potentially have exposure. Similarly, California's digital financial assets law takes effect in July 2026. This is interesting about New York. So let's see here. The interesting thing about New York is it's 10%, right? So what if we never let anybody buy more than 10%? You know, the dev that is launching, they can only buy up to, I don't know, 9% or something like that, just to make sure. I know that the federally this is chill, it seems, but I don't want any smoke with New York either. I don't want to smoke with anybody. You don't custody funds, you don't transmit fiat. They're ERC-20s deployed by creators, not by you. But geo-blocking high-risk states like New York, potentially, and California at a minimum to have robust service claims. Okay, I might just block New York and Cali. Money transmission. Are you in the clear? This is the one where most launch pads. The question is, does your platform constitute money transmission? Absolutely not. Your platform doesn't take custody of hype or tokens at any point. The bonding curve is a smart contract, not a hosted wallet. You're a software provider. What is this 0.5% creator fee, dude? There's no 0.5% creator fee. Let's see here. 0.5%. Yeah, there's no creator fee. You are in significantly legal or better legal standing today than any prior point. The March 17th, 2026 joint interpretation is the most comprehensive and favorable guidance for the meme coin space ever received. Your platform's design, trustless bonding curve, LP burn at graduation, AI screening, no custody of user funds, entertainment framing aligns well with every requirement the SEC and CFTC laid out. This doesn't matter because I'm not gonna do anything malicious. I think the problem is that somebody else might try to do something, and I just gotta try to fight off scams as hard as possible. New York and California is real and unresolved. I kind of want to just block New York and California. block New York and California if that's possible. I know that's possible, actually. Money transmission analysis, we're good on that. Not holding any funds. It's not permanent law until things pass. The fractionalization, this would be a stretch. I'm not a lawyer, Moon, yada, yada. Geoblock New York and California, people. Okay. Let's definitely block New York. Block the Wall Street quants. Sorry for joining. It's 11:25 here. You're good, dude. I want to say bless you. Thank you, dude. Appreciate you, dude. Claude having a customer service fax and escalation process is 100 on point. I don't know who you got in the Caribbean that can offer you legal identity, like an issuer. I don't know what you mean. Legal identity. The fuck is that word? I've heard it before. I don't know what that means though. Here's the keys and everything. Okay, so let's say safer one. Okay, let's go ahead here and say, can you geoblock moondev.com/launch? Can you geoblock to make sure that California and New York people can't go to the website? That specific part of the website? Just say, sorry, it's not available in your state. Because based off of the last 3-4 days of asking Claude over and over again, this is the biggest concern I've seen. And it's been introduced today, the New York, California thing, but I want to be as careful as possible. I can also just block New York and California if that's better. Is it contractual agreement where one party, the indemnifier, agrees to compensate another party to specific losses, damages, and liabilities occurred, often providing security against legal or financial risk? You should also consider it to check for requests coming through VPN data centers. It's a good idea. It acts as a hold harmless clause to shift potential liability for risks such as negligence or breach of contract from one party to another. Damn, dude. Let me go ahead and look into this, dude. I'm curious about that. Let's copy your chats here. What are your thoughts on this and like yeah, setting this up? One of my friends was telling me about this to keep this a little safer. And then on top of that, I finished the platform. The product is done. The smart contracts are done. Everything is done, ready to launch here. And while I go ahead and just keep diving deeper into research just to make sure this is super kosher, so far it seems pretty kosher. You did bring a couple concerns about California, New York up, so thank you very much. The fraud stuff is like, this is not malicious. We truly are only allowing meme coins, and we're going to do our absolute best to be on the actual government side, right? There needs to be a platform that cuts down on this rug rate, and that's what we're spearheading here. So I look at us being on the side of them more so than anybody else. Everybody else is just moving fast and breaking things. We waited 2-3 years, watched them move fast, break things, waited until the legislation is at least talked about and agreed upon. So that's a good thing. That being said, I want you to go ahead and also tell me this. Is there any risk in launching just to beta test this? I'll call them like test, do not buy. I so far am still just building the software. I'm not really trying to launch meme coins myself, but I know other people are. So I want to build this platform out. But as a developer, I have no intentions of launching a meme coin. I'm never going to launch a meme coin myself. I'm never going to have a moon dev coin, none of that. Because I think that brings in other legal hardships, right? I just don't want any smoke. I think building the software is okay. It's fine. People are going to launch no matter what, whether it's Pump Fun or a safer place like this. That being said, I need you to confirm that launching 5 to 10 test tokens, saying like test token, don't buy, test two, absolutely don't buy, things like that, just to make sure the infrastructure is working, that should be fine. All right, let's see what she says. Let's see here. Good instinct to think about that proactively. Let me break it down in an honest opinion. 10% cap idea. It's clever, but has limits. Rug pull developers selling more than 10% within 5 years. So capping at 9% would technically keep the creators below that threshold. First, the bill is still in committee. It's not law yet. The definition could change before passage. That's a much already shifted from rug pull definition from percentage-based threshold based on the conduct of the actor. That's a much squishier standard. A hard 9% cap might protect against the original bill text, but not the amended version. Second, a 9% cap is trivial, easy to circumvent. That's true. Third, this is a real issue. The cap only addresses the rug pull provision. The bill also has a standalone virtual token fraud offense that covers any deceptive practice in the purchase, sale, or exchange of virtual tokens. That's a general anti-fraud provision. That said, the cap is still worth implementing. There's a strong design choice regarding NY. I'm blocking NY and California. This is actually the cleaner path. Okay. I'm just going to block them. I mean, let's be honest, dude. California, you got the motherfucking sickest motherfucking state in the motherfucking world, and you like tearing that shit down. Okay, boom. And New York, I fucking hate Wall Street, dude. I'm not mad at Xing out either of those states, bro. And I'm from the West Coast, so we don't like California people. I'm sorry, dude. You got the best state in the world. You don't even take care of it. Come on, bro. Lock in California and New York, the best city in the world. New York City, the best city in the world. Why do I hate them? Because Wall Street literally put together the stock market to dump on retail. And they want you to think that you can't automate your trading. So F all of New York too. New York, Cali is out of here. I'm sorry. Is it bulletproof? No, VPNs exist and determined users will get around, but it's just a liability. You've taken responsible steps to prevent access. And then let's say here, also in our terms, say not available in California or New York. All right, so Cali, New York, you're cooked. Shout out to Gavin. Implement the 9% creator cap as a platform-wide design feature because it's good. One more thing, if you geoblock, make sure your marketing doesn't specifically target those states either. No paid ads. See, I'm not trying to do all that, dude. Tupac, I'm not sketched like that. I don't want offshore entities or anything like that. I just think that's a big red flag. Best places that are cooked. I don't want to do any offshore. It's exactly the structure of Pump Fund. Yeah, I don't want to structure like Pump Fund. I think Pump Fund had to go offshore because they were going against regulation. I waited till regulation to shift before doing this. And I've looked into this multiple times. It's just that I've bitched out every single time because the regulation's just not there. But now that the regulation is there, it's like, okay, it's interesting to me. Appreciate the late night check-ins from Sydney and the kind words. Let me address everything. This is a smart suggestion from your friend. The idea is that if someone sues you or a regular comes knocking, you have a contractual or insurance backstop that covers legal defense and defense costs and potential settlements. There are a few ways to approach this. Professional liability, E&O insurance, is the most common route for software platforms. You'd want a policy that covers claims arising from your operation of your platform. Things like a user launched a fraudulent token and the victim is suing the platform. Several insurers in the crypto space write these policies. Nexus Mutual offers on-chain smart contract risk specifically for additional E&O. Brokers like Marsh, Aon, and crypto specialists like them write policies. So this is fire, dude. Thank you. I definitely got to get E&O if I'm gonna do this. E&O insurance. Definitely got to look into that. Definitely got to get it, honestly. Contractual indemnification is the other piece. Your terms of service should already include the indemnification clause where creators agree to indemnify Moondev against any claims arising from their token launches. You launch the token, you're responsible. Okay, so let's go ahead here and say this. Make sure that this is sprinkled in before they launch a token on that terms and also on our main terms that this clause. What's up, Arthur? From Indo, huh? The challenge in Puerto Rico specifically is the insurance market is thinner than the mainland US. US Realm and Bermuda or Lloyd's Syndicate in London are probably your best bets for a crypto specific policy. Budget wise, expect 15 to 50K annually for a reasonable E&O policy given your platform's risk profile. Worth every penny. Absolutely. On your role as a platform builder, not a token launcher, you're thinking about this exactly right. Your instinct to never launch a Moondev coin is correct. And I want to reinforce why. The entire legal framework protecting you rests on the distinction between platform operator and issuer. The SEC's February 2025 staff statement and the March 17th, 2026 joint interpretation both analyze whether the promoter is undertaking managerial efforts that create an expectation of profit. If you're the promoter of your own coin and the platform operator, you collapse that distinction. Suddenly, your platform marketing, your YouTube, your audience, your daily Zoom calls, all that becomes evidence of managerial and entrepreneurial efforts. That's why I'll never do it, dude. By staying purely on the software side, you maintain the cleanest possible legal structure or posture. You built the tool, other people use it. You don't control what they create. And your AI screening is a good faith consumer protection measure. That's exactly where you want to be. On beta testing with test tokens, do not buy. This is completely fine, and here's why. Deploying test tokens to verify smart contract functionality is standard software development practice. You're not promoting a token for sale. You're not soliciting buyers. You're explicitly labeling them as tests. A few practical recommendations, though. Name them something unmistakably clear, not just test token. Okay, so test only, no value. Let's just go ahead and get these going. I got to make sure that they work. Make it impossible for someone to accidentally buy. 777, fam. Good morning. Chilling, bro. Document everything. Don't promote the test tokens. Keep it internal. 5 to 10 test tokens is reasonable. On your broader philosophy on the side of the government, you're positioning this exactly right. The regulatory landscape has shifted in your favor specifically because platforms like Pump Fund demonstrated the worst case scenario, 98.6% rug rate, zero screening, zero accountability. You waited, you built safety infrastructure, and you're launching into a regulatory environment that is actively asking the industry to do better. The AI screening, risk scores, creator wallet tracking, LP burn, the 9% cap adding, that's a compliance story regulators want to actually hear. The one thing I'd add, document your compliance posture in a one-page regulatory philosophy document that lives on your site or is available on request. Something that explains your AI screening methodology at a high level, not giving away the secret sauce. Yeah, this is good, dude. You're in a strong position, Moon. Let's get it, dude. Let's get it. I'm building another pump fund on Hyper EVM. Yes, essentially. Okay, so I'm curious here. Is it the front end? I think it's, let's see. Between the front end and the back end of this, there is a place, if you look at how Pump Fund does this, and just answer this question after you look through the code and let me know if it's a front end or a back end problem. You know, we got the server where everything is launched at. The idea is this though. Pump Fund allows creators of the token to buy any amount of the token when it graduates, right? Look into that. See what amount they can buy up to. We want to make sure to cap that amount at 9% across the board. So if somebody creates a token, they cannot auto buy more than 9% of the supply. I don't know if we even have that functionality in yet. So check it out and let's go ahead and, you know, any instructions you have for the backend in order to make this, let's do it. Let me know what we have thus far. Okay, this is moondev.com/launch. Da, da, ba, da, ba. I've I've launched a bunch of strategies on polymarket. The ones you're probably talking about, the 5-minute strategies. Is there a buy option as soon as they create too? I'm not sure yet. We'll see. That's right. That's right. That's how it is. That's how it is. You're right. Thank you. In my mistake, I think it's right when they buy, right? So look into that. Are the creators able to buy on graduation or is it right when they launch it? I think it is right when they launch it. So double check that. Appreciate Josh in the chat. But regardless, we got to make sure that we don't enable them to buy more than 9% of the supply. No, 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 no. They're not able to buy more than 7.77% of the supply. 7.77. That's the max supply that they'll be able to buy from us, you know? If they do some scam shit, if they do some scam shit, like I we only can control what we can control. And from their wallet that they're launching from, they're not able to get more than 7.77% of the supply. This will keep the game much more fair and again, keep attacking that 98.6% rug rate because that's the problem. People are going to continue to launch meme coins, but we now have regulation that says it's chill to do this, but we got to stay on their side. We got to attack the biggest problem in the industry right now. Everybody comes into crypto and gets absolutely fleeced. If we get that number down, we're helping. I got a solid strategy. I mean, I'm testing ideas, testing a lot of ideas. What about you, Stack Overthrow? What you got? What you got? What you working on? I put out all my videos so you see my ideas. So the current create token has no initial buy feature. It just creates the token with point one. The creator gets 0 tokens at launch. After creation, the creator or anyone goes to the token page and buys through the curve. Okay. But nothing stops the creator from doing multiple buy transaction. The supply is 1B tokens, 800M curve. The problem right now, there's no cap of how much the supply creators can accumulate. They could buy 10 hype buys. Where this needs to be enforced, this is a smart contract platform or problem. The real enforcement has to be on chain. The tokens buy function needs to check if the creator, and if so, cap their balance at 7.77% total supply. If it's only in the front end, someone could just call the contact directly. Okay, interesting. So I gotta redeploy the contract. That's fine. That's fine. That's fine. I'll redeploy it. It hasn't started yet. This is going back to our moondev.com or our what we were talking about the safe launch. So we got to redeploy the contract essentially. We can't let anybody purchase more than, or we can't let the creator purchase more than 7.77%. So we need to check if this is true and then only let them buy up to this amount. I kind of like, okay, and I know that we don't have the auto buy immediately of the creator. And personally, I think that makes it safer. But what do you think? You know, on Pump Fund, they allow the creator to create the token and buy a bunch at the start. If we don't let them buy at the start, isn't that a safer market than allowing them to be the first TX buy? I don't know. Let me know your thoughts on that. I see the downside is that some people might be able to buy before they bought their own token, whatever, but it's also an upside. And if we're leaning into safety here, that might be a good thing. What are your thoughts? Okay, I got my server ready. Capital rotation platform instead of tend meme coin. I know crypto are too crazy, but people like safe high return. Yeah, I can't. I'm not here to promote returns, dude. So I can't do like a capital rotation. I don't even know what that means, but it's interesting. I don't know what that means though. I think not having the auto buy is actually a stronger safety. Here's why: the pump fund problem. Creator launches token, buys 20% in the same transaction, waits for hypes, and dumps on it. With your setup, the creator token TX creates the token. They have to buy on the same curve like everybody else. There we go. The downside is actually an upside for your brand. Yes, a sniper bot could front run the creator, but think about it from the buyer's perspective. If the creator doesn't have a massive bag from block zero, there's less dump risk. Yes, dude. The 777 cap on top of this makes it even stronger. Even if the creator does multiple buys after launch, they can never hold more than 7.77. So the pitches on other platforms, okay, add that pitch to the front end. You know, that's a big safety point. Now creators can't just buy and then dump on you. They have to buy on the open market just like everybody else. And they are capped at 7.77%. I'm gonna put the I'm gonna put it in the contract. So I'll send you back what is needed to update on the contract. After you implement this, go ahead and send me any updates to the front end team to update the contract, the things that they need to do to update it. So I got my server right here on the right side. I just can't show you all that. Tax friendly jurisdiction and reduce overall tax. I already live in a pretty tax friendly jurisdiction, so I appreciate your guidance though. Yeah, I'm not doing all that. I'm not pushing that. I got a good tax situation where I live at. I appreciate you, bro. I don't like to push regulations like that. I don't want to like have, and that's fine if you guys do that. Like, I'm not here to tell you how to live, whatever. I'm just scared of that type of stuff. I want to stay as white hat as possible. So I just wait for things to get cleared before I do anything. And I'm not gonna have like offshore anything ever. I'm just not interested in that. Like, I'm already an entrepreneur, you know? I can't let these people in the room, so they're cooked. Oh, there they are. But yeah, tax wise, I already got the best I can get in America. So done. Here's what was added: landing page, no creator head start. On other platforms, creators auto buy massive bags at launch and dump on you. Here, creators launch at zero and buy on the curve. Like everyone else, capped at 7.77% of the supply. No insider advantage. Can the creator dump on me? Creators don't get a head start here. There's no auto buy at launch. They start at zero and buy on the curve like everyone else. Their wallet is capped at 7.77%. Perfect. When you send back the contract update with the 7.77, I'll go ahead and do it. So now I'm just waiting on the server side to add that new contract. Can you show us your best strategy so far? I'm curious. No, but I will give you the keys and everything, API key, etc. Moondev, can you show me the password to your safe that is holding millions of dollars? I'm just curious. It's like for real, the same shit. It's literally the same thing. I know they don't mean to be cooked. It's just I'm so deep into this game. I understand how this works. You got to protect your edge. Earn but not given. I'll show you every step of the way in order to go from hand trader that's emotional to fully automated trader, but I'm not going to give you something to plug and play. It's sad I got to say that every day, but I mean, it makes sense. People are conditioned on the internet to go after get rich quick type thing. So it just is what it is. Just is what it is. So I'm waiting on her to work this up here because I'm making a contract change here. So good thing that you know, this is just gonna take a while, I feel like. Just like anything. Good things take time. I got patience. I got patience. Check your DM, please, Moondev. Check your DM. Check your DM. Check your DM. Oh, shoot me an email. I just shot you an email. I just wanted to tag you and tell you to check your DM as well. Like, chill out, bro. Relax. Patience. Patience. Patience required. Patience required. Right? If they can't screenshot and drop it in a Claude, like you're cooked. Nice. Use DigitalOcean. How much share your servers got? It doesn't matter. It's just a commodity, bro. You know, all those servers, like they're all the same. All girls are the same. Oh, is she done? She's done. All services done. Okay. Safer launch contract update. Creator cap 7.77. The token contract safe for launch. Okay, now enforced is 7.77. Okay. If the creator tries to buy beyond 7.77, the transaction reverts. What the front end is needed, new implementation address, ABI change. Okay, so I want to also talk about this before I do some of these tests here. So let's give her this. All updated for you. Go ahead and try it out or update the things. And then answer me this question when you're done. What is the graduation amount right now? I know we have a lower amount for testing, but like, what does that entail, like hard wise from our side? Because to test, it would be better if it graduated at $20 so I could make it graduate. You know, I want to make sure that that functionality works. So just talk about that a little bit when you, after you implement all this new stuff and confirm that. Because I got to make sure that that process works as well. You know? Have you seen the rise of agentic algo trading change how the markets behave in a significant way? No. I don't have the yeah, I'm not watching that shit. I'm just trading. Just trading what I can trade. Is that like, are you a journalist or some shit? You want me to give you a paper, a quote for the news or something? What metric would provide that insight? That's what I'm curious about. Like, how would I know? I don't know. Yeah, I just want to know. I think it's traded, changed the way I trade for sure. Has it changed the market in a significant way? Nah, I can't tell. It's too much for me. Now building and restarting. Okay. Oh, with polymarket, people use that as a side indicator. Maybe, I don't know. So I overslept a bit. No worries. I've been looking into your work for a while and wanted to know to join the stream 24 hours. You get the, yeah, you get the keys and stuff. Good morning, Ingrid. How are you? Oh, you're welcome. My pleasure. Thank you for letting me know. Glad that's helpful. I'm glad it's working. 777. Dixie, you won, by the way. You tied. You guys both won. Check out that video on my Twitter here. Check out the video on my Twitter I just posted about the winners. It's like 4 minutes, and then it shows you how to get access to the lifetime. So you won 1795, aka you won this if you want. Otherwise, you can have credits for unlimited Zoom calls or whatever else I sell. But this is really that. You got the lifetime all access bootcamp, and then so does Josh. You guys tied, so you guys both get access to what others have to pay $14.95 to $17.95 for. So much love to you. Thank you for joining. That was the arena leaderboard. You can see that JV, I think that's Josh in the chat, and then DXXXY in the chat here. They both tied here. So that was the first round. The vision here is to have rounds that go every day. Right now, it's every week. So if you do want to join beta 2, you can feel free to join. It's live now. Just go ahead, sign up. It's free, super easy to do. Read the docs. Essentially, you're just using Python in order to predict the next hour bar. You can read the docs, tell your AI to read the docs. You'll understand it in complete. And if you don't, I'm here. I'm here. I'm here. But this next one will end at the end of next week. moondev.com/arena, put in the terms that you can only win one time. You can only win one time for this beta. Because I mean, you can't. I don't have anything else to sell. I don't have more than $17.95 in products to sell you. So if you want credits, like you gonna have hella credits and nothing to spend it on. I got one lifetime offer and then these $5 loop calls. So my pleasure. Thank you for joining. Okay, so let's see here. The ABI updated here with creator supply. Okay, remaining allowance calculates this. So let's see what she's saying here. I accept your challenge, bro. Let's get it. All contract updates implemented. ABI updated. Creator supply. Creator max BPS. Creator detection. Reads creator. Okay. Remaining allowance. Calculates that. Warning banner. Shows Amber creator wallet. 7.7 supply cap with remaining allowance in buy panel. Revert handling. Creator cap. Now graduation. The current graduation supply is 10 hype. Set in the contract as graduation threshold. That's what's hard coded in Solidity. We show it on the front end as the graduation rate at the current hype. That's 10 hype. It's roughly $200 to graduate. If you want to graduate at 20 worth, that's one hype. Okay, you're kind of wrong on that. From our side, front end, change the graduation threshold requires 0 work. The front end already reads graduation progress from contract, the indexer. Okay, contracts is this, callable. So the only change is needed on the contract side. Update graduation threshold. Okay. Let's go ahead and graduate at 1 hype. All right, and then let's go ahead and update the graduation threshold to 1 hype because I want to be able to beta test this with some test tokens and make sure that the graduation process works correctly. So right now I think it's at 10 hype and we'll change it to 1 hype. Put a banner at the very top that's consistent throughout the page saying, do not buy any tokens launched right now. Everything is in testing by Moondev. If you buy anything, you are 100% liable. This is just a test phase. Put this banner everywhere and have it turn true for now. And then we can head as false once I do all the testing. You know, I'm testing the charts, the graduations, everything. So just put that banner there and say they're absolutely fucking cooked if they buy anything. So please don't participate in this. I'm going to go ahead and try to test this. I don't know if I'm going to keep this, you know? I'm going to test it, play with it a bit, but, you know, I'm going to talk to some fucking lawyers and shit. See if this is even worth it, you know? It's just like anything. I just want to make sure that this is super safe. I know algo trading is safe for me. So done. Absolute highway robbery. What they do to you on Robinhood to buy Hyperliquid. Like 40-10 right now. And it's not. I just bought some because I gotta test this, but it's $40.10 when the price is literally $39.75. Robinhood is cooked, although it's pretty smooth. It's like a good product. It's a good product, but you know, you get smoked on it. Graduation threshold is now one hype. Any new token that collects one hype on its bonding curve will auto-generate hybrid swap. Remember to bump it back when you're done testing. What are the implications there? What are the implications there of having a lower graduation rate? Is it just that the bonding curve will be less and there's yeah, I mean, yeah, what are the implications of having a lower one? I think it's just there's a smaller preseason or whatever. Shout out to JT. NCAA moon bracket would have been 20 minutes of code tops. Yeah, nah, I'm not doing that. I'm not doing that, but I did watch one of the endings of one of the games last night, and that shit was crazy. I was actually mind blown. Santa Clara versus Kentucky. That was crazy. I seen it on YouTube. I was really in awe. I watched the end like 3 times. Okay, so I'm gonna drop the keys in the chat just in case you're new here. You got the arena here. Let's see if she's done yet. All good. Let's see here. Liquidity depth on DEX is much thinner. When a token graduates, the real reserves gets paired with 200 million tokens and added to the liquidity. At one hype, that's one hype for 200K. That's why. Fewer tokens get sold on the curve. Okay, so price discovery. So I think that I can test this out now. Let's see if it works. Moondive.com/launch. Do not buy any tokens right now. Everything is in testing by Moondev. If you buy during this test phase, you will lose your money. No exceptions, no refunds. You are 100% liable. This is a test. Tokens launched right now are worthless. Nice, dude. So browse tokens here. Be the first to launch here. Read before proceeding. Read all that because this is sketch. If you don't, so connect wallet. Let's see if this works. I'm gonna try to connect it. Connect wallet here. And actually connect the EVM wallet. Let's say, let's change this to Phantom slash MetaMask. Phantom first because MetaMask is trash and who the fuck knows what Rabby is. Okay, let's connect here. Connect. Okay, so connect a wallet. And then we're going to have a sub pop up when you click connect wallet. Let's just have 2 buttons here. Connect MetaMask or connect Phantom. Phantom first though. Connect Phantom or connect MetaMask, because they both have to pull different calls, you know? Yo, can you throw the wallet that you use in the chat? What browser wallet do you use? Let me know in the chat. I just want to see what wallets people are using, so I make sure to have the buttons there. What wallets do you use? Me, I'm a Phantom guy. MetaMask if needed. Okay. Sweet. Nobody uses wallets around here. MetaMask, Phantom. MetaMask and Phantom, huh? Throw your wallet in the chat. What type of wallet do you use? Please, please, please help, 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 help. Done. All references, MetaMask? Both? Okay, I'm just trying to see if there's any other wallets out there that are being used. But it sounds like Phantom and Wallet will cover it. So we'll just do that for now. Compacting conversation. Sweet. I'll be back. I got to take it to wee wee. Yeah, let's see if she updated this. Done. Here's what I built. Phantom. See if anybody had a MetaMask. Rabby. Okay, somebody used Rabby, then MetaMask. Okay, perfect. I also use Trust, mostly Phantom for trading. Okay, it looks like everybody has access to Phantom then. Or do you, if you have access to Phantom or MetaMask, please throw a one in the chat. Phantom or MetaMask, either one. If you have access to them, then boom, throw a one in the chat. Okay, cool. So this should be a good beta because everybody has access to them. Perfect. So let me go here, go through the terms of service, make sure to read any of this. If you are going to launch any of these collectibles here, connect to wallet, Phantom. Okay, connect to wallet, connect Phantom, connect MetaMask. I'm gonna say Phantom here. Okay, my Phantom popped up. Put my password in. Okay, connect with account one. Unsupported. Network. The website is trying to use a network that Phantom doesn't support. For some reason, I get this website is trying to use a network that Phantom does not currently support. But, and it says to proceed, use a different extension, turn on settings, default wallet app, select always ask, and reconnect. But the thing is I see here that they have Hyper EVM on there already. It says light though, Phantom. I don't know if that's the reason why. Maybe they don't support a full version. Throws an error instead of adding the chain. The fix is this. So it sounds like there's a fix, which is good. I think this is fine to show you. I got one hype in there. I just put it in. Some new wallet here. I agree, understand. So this would be called test only, no value. Ticker symbol, test. Image URL. We got to make the image section uploadable. It needs to be a square image, so we'll just have to make it a square. Yeah, they'll upload a square, but we'll accept whatever image. It'll just be a square if they send a weird image, though. And it shouldn't be an image URL. Well, you could put an image URL. No image URL because that is sketch. We'll host the images for now, but later we will switch to IPFS. I think that's the best play. So for now, instead of the URL, let's go ahead and click an upload button of the image. You can also drag and drop the image. Good. See, we're testing. Are we gonna get a recording of the Zoom session like in our emails? Of course, dude. It's gonna be on the page that you joined with. So it'll be on that page. So just go back to that page in a few hours from now. Okay, let's go ahead and say I'm just going to use a black image for the test. Let's say this. Let's use this image here. A red image, I guess. Do not buy will be the image. I'm not planning on launching a token because it's just it'd be too messy. Since I log in every single day, that is where the log gets murky. Because if there's expectations of me working for profits for you, that's where like it gets sketchy. And I'm never going to go even close to that. So if you see a Moondev token launched anywhere, it's not me. I do not endorse it. I do not affiliate it. I will never launch a token. I've said that for years. And people keep trying to launch tokens under my name, but I'm not going to do that. So just be careful. Nice, Josh. Thank you. Leaderboard, history. Yo, congrats to you, Josh and Doxy. My pleasure. My pleasure. Super excited to dive into the course and the content and everything else you get in there. I'm excited for you, dude. I'm very excited for you. That's a really baller way to get inside of here. I love it. I love it. You put your money where your mouth, you put your time where your mouth is, bro. You went ahead and cooked and had a model that cooked for you. You let it run it up for you. So, boom. That's like your first. I don't know where you are in the automated trading process, but that's a dub if you ask me. That's a dub if you ask me. So Josh and Dixie both won 17.95 in credit, essentially allowing them to get the all access pass for free. And they got that through the arena, which we're just beta testing. As you can see, I test a lot of things here. So you can go to moondev.com/arena if you want to see how to qualify for a 17.95 credit here. I'll pick another winner next Friday. We'll do weekly until I can do daily, and I'll do credits until it's clean enough to do cash, because that would be very cool as well. Congrats, congrats, congrats. Okay, let's see what's Gucci here. So she uploaded it, replaced the image. Okay, done. Okay. And we'll store the image for now, but that's not a good thing. What do you need from me to switch to IPFS? Do you just need the IPFS account, or what are the thoughts there? And then are we going to be able to retroactively switch the images that we have into IPFS later? 777. What's up, J Will? your Twitter is permanently linked. So I'm just doing everything I can in order to make this a much safer. Like, I don't understand why Pump Fund didn't do this in the first place. Like, that at least have goodwill. Like, go try to help this, try to help people out a little bit. So making everybody connect their Twitter is, you know, people don't like to do sketch stuff when everybody knows who they are. So boom, that's gonna help just in general. Let's see. Let's see. This is all a test until it's not. I mean, nobody else has a platform here. A launch platform for Hyperliquid. Test. Don't buy. Okay, so I can drag and drop here. So let's go ahead and see if I can drag and drop that. Recent here. Do not buy. Dragged it in. Perfect. Connect wallet here. Phantom. I'll put my password in. Too much. I'm telling you, too much. Damn, so it still says that. Okay. I'm gonna go ahead and say launch. I'm still getting the same error when it comes to getting Phantom connected. So it still says unsupported network. Do you know what this could be? And I think what I need to do is I need to get this fixed, obviously, but I also want to get MetaMask set up here. Just test out. I need to test out both, really. So go ahead and try to get all this set up. Get MetaMask. I don't even have it. Browser extension, Chrome. Add to Chrome. Add extension. In case a previous winner finishes, you only can win one time. You can only win one time for now, as I can't give you more than $17.95 credit. I actually can't. If you're in the United States, I can't cross the $2,000 threshold. So you can only win one time. You could keep playing though. You keep alumni status on the leaderboard. Ooh, I like that, dude. I like that. Automatically passes to the runner-up. There we go. You got it right there. Good idea. Fire ideas, dude. Fire ideas. I appreciate the fire in the chat. It's really fun. It keeps me coming back, dude. Keeps me coming back. I have an existing wallet. I want to go ahead and import it. Import using secret recovery phase. No, I don't have that. Oh man, I really don't want to sign up for MetaMask right now. Create new wallet. If I lose this password, okay, create password. Tap to reveal. Okay, I gotta put in all these real quick. So number 6 is that. Number 7 is that. Number 11 is that. Continue. Got it. Don't gather any knowledge about me. Open wallet. Okay. Wallet is open here. Account. I gotta say add account here. I gotta actually grab an account, actually. Grab the other account from what's it called? Phantom. Manage accounts here. Okay, I want to get that account over there. Show private key. Yes, please. Okay, I need the Hyperliquid EVM. Okay, continue. Copy. Okay, and then I'm gonna go ahead and import that over to new account here. Add account here. Add wallet. Maybe import on all wallet. Yeah. Import. Okay, I got that imported now, and this is gonna be imported wallet. Rename it. Called launch example. Okay. Okay, and then I need to go ahead and say view all wallets, all popular networks here, Hyper EVM, add that one. Okay, so we are locked. I got it. I got it set up on MetaMask. Okay, that's great. Okay, so let's see what she did here. The fix no longer calls switch Ethereum chain for Phantom. Okay, it was triggering unsupported. Okay. Now Phantom Connect. Okay, so let's go ahead and try this again. I understand. Okay. Connect wallet is what I'm having a hard time with. Got it. I'll switch to it manually. Switch to Hyperliquid EVM Phantom before transaction. Okay, it works with that, no problem. Do you think it's because Phantom only has Hyper EVM light in there? It says light. Is that why this is giving us a hard time? Because I just connected immediately with MetaMask, no problem. I mean, let's be honest. If you have Phantom, you have MetaMask, right? I think so. I think that's what it means. I mean, I think that's what life is. If you are deep enough to have Phantom, you probably have MetaMask. Let's see if I can connect wallet though. Yeah, that's almost certainly it. Light and Phantom means they have basic chain awareness. They know Hyper EVM exists. Okay. So let's just go ahead and say default to MetaMask for now. Yeah, just change the button to connect MetaMask instead of connect wallet. So there's a few places up at the top right, you put that, and then in the bottom you have the submodal that's showing Phantom, etc. But now it's just going to say connect MetaMask, and this is a beta version, so it doesn't matter. Just gotta, I want to see the functionality work here. Oh my goodness. If you guys want the discount on everything, this is closing obviously because it is no longer St. Patrick's Day. So I'm gonna keep cooking on this, but you see what you get. You get the algo trade camp. I show you step by step how to automate your trading. I give you the AI master classes. I show you exactly how to use AI to do all the heavy lifting. So don't worry if you've never coded before. I didn't know how to code either. You get the Solana copy bot and the sniper bot course. So I turn you into a algo trader that can trade on any market, including Solana, polymarket, hyperliquid, any stock exchange, forex broker, whatever. I give you unlimited Zoom calls. And then you also get Quant Elite, which is crazy. People are paying $300 a month for because you get 300 plus bots and backtests and new code added every single week. You get lifetime access to everything, plus all new drops. Plus, you get the Moondev Vault. So the Vault has all of my past streams. The things that were taken down from YouTube, you get a dive deep. Plus, you get the API key for life. You get lifetime access to the API key, hyperliquid data layer, liquidation data that would cost $900 a month for 12 days elsewhere. I give you 18 months of data. Plus, you get my trading bot GitHub, you get my exclusive AI agents GitHub, and you get the Quant app access, the MoonDev app access, where you can go ahead and see everybody's positions. You can code, you can see I've been coding in this entirely all day. So I use it all day because I think context switching is very tough when you have a bunch of tabs. But if you want to see everybody's positions, you can also see everybody's positions. So that's pretty cool. You get all of this lifetime access. Never have to pay me anything ever again. And there is a discount going on for St. Patty's Day, which is closing. So if you have any questions, let me know here. I got a bunch. You see, I'm building. This is just like, hey, if you want to get caught up to speed with me, this is how you learn everything. I can't teach you everything because I'm trying to take over the world, and you watch me do that every single day. So if you want to see exactly how to get your trading bots live so you can get your time back, I'll show you everything in the Algo Trade Camp, and then you get everything else here on the screen. I'm not going to charge you the 48,000 it's worth, not even the 24,000 or 12,000. I'm not even going to charge you 7,200. If you look around, everybody else is going to charge you between 7,200 and 24,000 for anything even close to this, but it's not even close. 1,500, save 300 bucks today. Moondev.com/lucky is the link. I'll be here every single day. There's hundreds of people like yourself that have found me on the internet, joined. You can see their testimonials. I don't need to pitch you on this. I am just letting you know that this discount is closing. St. Patrick's Day is over. We're going back to wartime. It's lucky time right now. Yes, you're lucky. Moondev.com/lucky. We're going back to wartime. If you want to be on the inside, if you want to be on my team, if you want to be in my community and know everything that I know, plus get all my code, okay, join. While you have the chance, you just go over to moondev.com/lucky. You can see there's 65 hours till this is gone. So, have your nice little weekend, but then let's lock in. $300 off. And you know for a fact that there's no risk here because there's a 90-day money back guarantee. No questions asked. If it's not for you, it's not for you. You don't even have to tell me why you want your money back. It's 90 days, no questions asked. So you see what you get. You get the Algo Trade Camp step by step, showing you exactly how to get your trading bots live. You get both my GitHubs. You get the API key for life. You can see what hundreds of people have had to say about this boot camp. Now you get the boot camp plus all of the other goodies shown on this screen. Moondev.com/lucky. If you have questions, let me know. Okay, done. Remove the wallet modal entirely. Perfect. So let's go here and okay, let's go ahead here and say test. 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 Let's drag in this information here. Connect MetaMask. Come on, Blood. So I click connect MetaMask, but it pulled up my Phantom. It needs to pull up my MetaMask. Silly girl. That is wild. I tried to download the app. Now I need the API key to launch it. Only when by training. Nah, if you download the app, then you have the API key as well, Jacob. It's in that same block of text, but I'll send it again here. 1 second. 24 hours. 24 hours is the length of the API key. Let's go ahead here and get homeboy the key again. And anybody else that is new here, or welcome. Saturday morning, huh? I guess it's Saturday morning. I guess it is Saturday morning, technically. I'm about to go to the beach, so How long is the API key? Tomorrow. You the real MVP. Deployed it. Now checks. Let's go ahead and just connect immediately because I'm acting like a silly guy. Hey, there we go. Launch X connect. Okay, and then I'm just gonna go ahead and try to see if this works, dude. But I gotta get going actually, so we might have to wait till next time. I gotta get going. I gotta get going. Screen and deploy. AI safety screening, checking for impersonations, duplicates, and scam patterns. Throw them, dude. Throw them in the chat. You know I like fire in the chat. Revert. Okay, so we did get this error. Okay, sick, dude. We're making progress though. So a little bit of an error when I did launch. All exception. Hmm. Something that's fundamentally wrong with this contract deployment. Let me check if the contract's bytecode matches what we expect. Okay, so our contract doesn't work. It's about sharing the early buyer superior exposure and tranches to the later buyers so they don't get dumped on. Interesting. Let's go ahead and see if we can interpret this. Bonding curve, launch models, pump fund versus multi-tranche blended curve, pump fund, user buys, bonding curve, prices rise, liquidity to DEX, early sells, crash. Multi-tranche model is user buys, and there's an allocation engine, split 1, 2, 3, blended price, smooth launch, stable market. It's a good idea, dude. Let's go ahead and dive into it. Thank you. This is actually a good idea. Can you talk about how this could be completed? Because that is smoothing out the buys and allocating almost could be a good approach to this. I think Coinbase purchased a company that does almost ICOs, and now with the new regulation, I don't know if an ICO for meme coins is we don't even want to go that route, but like kind of everybody buying and then distributing it through our allocation engine. I don't quite know what Homeboy's trying to tell me here, but I trust that he's thinking about this. He clearly wrote a description here. He made a chart, but there's somebody in the chat, and I think looking at ways to make it more fair when it gets to the real DEX is interesting. And I want you to explain this chart, how we can implement something like that to smooth out the curve for everybody and just make it, again, we're leaning into safety. If you go to moondev.com/launch, our whole thing is 98.6% of memes rug. And I think I and a lot of people I know that have been crypto for a long time think that meme coins were like poison to the crypto industry. So if we can make that poison that everybody's still gonna fuck with no matter what, it's like everybody's always going to use max leverage. Everybody's always going to trade memes or always going to launch new memes. We make it a little safer. That's a dub for the industry. We're bringing it back. Anyways, I could ramble about that forever. Let's see what's Gucci over here. It's not a factory, it's a token implementation contract. It has buy, sell, ERC20. The factory is a different address. A proxy at this address delegates a token template. When you call create token, it reverts because the function doesn't exist. Create happened to work because they have selectors that coincidentally existed. You need the actual factory contract address. So please go ahead and explain the error, what's happening, what our situation is. I am the controller of the contracts as well. So I'll just tell my AI teammate to update that. Exactly how you need it updated. Just let me know. Let me know. Let me know. Let me know. There's a balance of trying to gamify it. Okay, let's go ahead and send this over here. The address is not the factory. All right, so we failed on our first launch because we got an error of missing revert data, etc. I'll show you the error, but then my front end, AI that's running this, gave you the feedback above, and below is the error that we did get. So what, dude? So what? I don't know. I'm just gonna get out of the way and copy paste some shit and move on. That's all I can do. I can't be up in here and telling them what's going on because I know I'm a data dog, but damn. But damn. But damn. It is the factory. The actual problem is the function signature. Let me decode that front end, what's it sent. That's the problem. The front end is calling. Okay, so I don't even know what the problem is, but I'm gonna read through it. Here's the problem. The address is not okay. Okay. Let's go ahead and send that to her. The problem is the function signature mismatch. The front end is calling create token string string string, but the factory's function is string 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 byte 32. It takes 5 parameters. Plus, they need 0.1 hype as message value. Here's what to send back to the front end team. The factory address is correct. It has owner, implementation, creation fee, all working. Your bytecode analysis was confused with the ERC 1167 clone patterns embedded in the factory. The error is a wrong function signature. You're calling create token string 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 3 params, but the actual function takes params 5. These 5 params. Okay. So it looks like a front end problem. Fix and deploy. The issue is the ABI mismatch. Okay. So I verified it against that. Okay, let's go ahead and try it again then. Let's go ahead and try it again. So I'm connected here. Connect, switch account. You can switch account. I'll have to think through that. Like switching account. I think it should be one account per Twitter. Yo, ensure on the back end that we only allow one Twitter account per MetaMask account. So if they ever are logged into that Twitter account and they connect their MetaMask, we won't allow them to use that account in MetaMask for. All right, now I'm just being overbearing. I'm just not gonna, I'm just going to see if I can get this functionality to work. Like, come on, lock in, gang, lock in. Just get this test through. I got to get Ghost. So are we connected already? Okay, we are connected. Screen and deploy. AI safety screening, checking for impersonation, duplicates, and scam patterns. AI safety screening here, checking for impersonation, duplicates. Okay, I'm gonna be doing this for a long time, so I think I'm gonna get Ghost. Much love to you guys. I'll give it one more try. Bug, please fix. I'll give it one more try, but I do gotta get going. What's interesting is that early buyers can't sell to the market. They sell to late buyers only, not that transaction can be managed in a more equitable manner. And that's the opportunity, in my opinion. A lot of good ideas, Let's go check that out. This is a really interesting concept for your community member. Let me break it down. And I think the remote proposing what the chart is saying. The left side is standard pump fund model, which is basically what you have now. User buys, hit a bonding curve directly, price rises mechanically along the curve, liquidity migrates to a DEX at graduation. Early buyers who got in at the bottom of the curve sell immediately into the DEX liquidity and the token crashes. This is the classic pattern that reduces 98.6 or that produces 98.6% rug rate, even when the creator isn't malicious. The curve mechanics themselves reward speed over conviction. Snipers and bots front run the curve, accumulate at the bottom, and dump the moment graduation hits. The right side, which is the multi-tranche blended curve, proposes a different mechanic. Instead of a pure bonding curve where early equals cheap and late equals expensive, there's an allocation engine that sits between the user's buy and the actual token distribution. Buyers during the launch phase all get a blended price rather than a first come, first serve curve price. The tiers 1, 2, 3 likely represent time windows on commitment levels, not price levels. The result, everyone who participates in the launch gets a similar average cost basis, and there's no massive incentive to dump at graduation because nobody got 100x cheaper than everyone else. Interesting. I like that. Think of it like a batch auction rather than a continuous curve. Here's how you could implement it. During a defined launch window, say 30 minutes or an hour, all buys go through or go into a pool. No one gets tokens immediately. Instead, the allocation engine collects all the hype committed during the window. At the end of the window, the total hype collected determines the market cap and therefore the price. Everyone who participated gets tokens at the same blended price proportional to how much hype they committed. Then after the allocation window closes, normal bonding curve trading resumes, or the token goes directly to DEX trading. The tiers could work a few ways. Tier one might be a smaller early window with a slight discount, say 5%, to reward early conviction. Tier two is blended price. Tier two is the main window with the blended price. Tier three might be post allocation curve phase with slightly higher prices. But the key insight is that the spread between tiers is much smaller than the spread on a bonding curve, where the first buyer might get 1,000x cheaper than the last buyer before graduation. The Coinbase connection you're thinking of, you're probably thinking of Coinbase acquisition of EcoPex, a fair launch infrastructure. The broader trend is that the industry is moving towards fair launch mechanisms precisely because raw bonding curves have proven to be sniper friendly and bot dominated. What your community member is describing aligns with that direction. And no, this isn't ICO. ICO implies raising funds for a project with an expectation of future development and returns, exactly what the Howey test does. What you're doing is a fair distribution mechanic for a collectible. The distinction matters. You're not raising capital for an enterprise. You're distributing a meme coin more equitably. The March 17th framework classifies meme coins as digital collectibles, regardless of the distribution mechanism. As long as there's no investment of money in a common enterprise with expectation of profit or other from others dynamic. How to implement this on your platform. The smart contract would need two-phase structure. Phase one is the commitment window. Users send hype to the contract during a fixed time period. The contract records each commitment but doesn't distribute tokens yet. Phase two is the allocation and distribution. Once the window closes, the contract calculates the blended price based on the total hype. A few design decisions you need to make. First, you have to cap the commitments. If the commitment window collects more hype than expected, do you return the excess pro rata or do you let the blended price be higher? Pro rata return is fair but more gas intensive. Second, what happens when someone withdraws? Too short. The legal angle of this. From a regulatory, this is actually better than a raw bonding curve. A fair distribution mechanism where everyone gets a similar price looks less like a speculative instrument designed to reward users, which is exactly how the SEC wants meme coins to look. The batch auction model eliminates the snipers get rich, latecomers get rugged dynamic that regulators cite when they talk about the meme coin harm. One thing to watch out for, don't call the tiers investment tiers, frame it as a blended price as a fair value in a way that implies the token should be worth something. In a way that implies the token. One thing to watch out for, don't call the tiers investment tiers or frame the blended price as a fair value in a way that implies that it'd be worth something. Keep the language consistent. This is a fair distribution mechanism for a digital collectible, full stop. This is generally a strong differentiator. If you could ship multi-tranche blended alongside the AI screening, 9% creator cap, and LP Bird, you'd have the most consumer-friendly meme coin launchpad in the market by a wide margin. The safer launchpad branding becomes even more credible. It's also a much harder product to copy than we just added AI screening because the smart contract mechanics are non-trivial. I talked to your community member more about the specific tier structure they had in mind, prototype it on testnet and run it as a V2 feature. After your initial launch is stable, ship the current bonding curve first. It's proven it works. It's legally clean. Then add the blended curve. Yeah, I like this idea, dude. Thank you. Thanks, Fupa. Appreciate you, bro. Enjoy the beach. Thank you, dude. It's a fire idea. V2. V2. Try some of I'll try some of everything. Everything that is chill. Like this seems like just straight with the whole like, hey, let's fix this problem. 98%. That's crazy. Things like this will bring it down to instantly because the bonding curve is allowing people early to win and latecomers to lose. So I like this instrument. So let's go here and say launch. I'm gonna try one more time, but you have moondev.com/lucky if you want to join that. This is probably gonna take some iteration, but I gotta get going. So I'm gonna get goes. I just want to test it one more time. Just one more time. It'd be wild if I launched Pump Fund in 2 days. Fun too. Screen and deploy. Fun. Are you back live tonight or tomorrow? Who knows, bro? Who knows? I'll be back when I'm back. I'll be back when I'm back. I might not be back for a month. Who knows, dude? Who knows? Usually in the mornings, though. I'd say tomorrow morning. If I pop up in the afternoon, that's just I just couldn't wait. I just couldn't wait. I had to do it. I had to do it. Okay, I got rejected. I got rejected by my own screener, so this is awkward. I changed the name. Let's see if I can get through, dude. Okay, deploying the Hyper EVM. Be careful. Okay, it's gonna be 0.1 hype to launch. Confirm. Oh God, I gotta go, dude. I gotta go. Creation plus gas fee. Create an ERC20 token with bonding curve. Test token. Don't buy this. Don't buy this. I got a lot to test on this, so see if this works first off. But this is fun, dude. This is fun. Okay, so it looks like something broke here. Token created, but could not parse address. Check the Explorer. So it looks like that we launched, which is awesome. But there was a bug here. Absolutely goated. Thank you, dude. Thank you. Yeah, cooking to get traction and you know you have to leave. Like, oh, it's the worst. It's the worst, dude. Oh man. I gotta go. Wait, hold up. Also, here on moondev.com/launch/browse, it's not showing up on that page either. So fix both of those things. All right, I'm gonna come back some other time. Much love to you guys. Thank you for coming through. This is fire. But I do gotta go. I got a beach commitment. Poor B, dude. Poor B. Much love to you guys.